when you go in to close your month, you release all the transactions to the general ledger and post in the general ledger. Now, previously in the pro world, you had to do that by each individual module. Mm-hmm. But the later versions, including 2010 here, you can set it up in the general ledger instead of asking for each module to release to the GL. You can go to the GL and pull from all the modules. Today I'm only going to feature AR, AP, and IC. If you have payroll, you could do it here also. If you have job costing, you can do it there from that module also. So any module that would feed to the general ledger can be used here. And what I have done here is I've created a new preference set here, and says what I would like to do is speed up my closing, and I will do this by selecting my preference here is, I'm calling it demo. I am going to release from accounts receivable, accounts payable, and inventory control, and I'm going to do it in one step. Is anyone using this where you're pulling from GL?
There's two
7.5 doesn't offer that.
A 3 that they can,
I thought that was added in 7.5, but I'll double check on a 7.5 version. I think I have one loaded on my system here. But you may not have looked at that. So you do it from the GL side here, and what you are doing, what I would recommend is you might want to have 2 of these. One, which would just print the reports and not necessarily post to the GL. And we could do that by just unchecking here, release to GL. So you could just preview all the modules, see if everything's in balance. You might just print to your local printer, and when you're set, then you could set it up, and you could then have another item that would do all the releasing to GL. And in this case, I said if I have an invalid account or an inactive account, I will tell it to post directly to the suspense account in the GL. That way it won't stop my closing, but I would have to look at the suspense account and make sure I close that out at the end of this period. So as we're going through here, this is under maintain under transactions. Generally in the other modules, and I'll switch over. If you're in accounts receivable, you're going here to transactions, and you're releasing the GL, and you go through all the individual modules that way. Mm-hmm. This later versions, we are able to go to transactions and release to GL. Select my preference. And then I can edit here if I want to change anything. Otherwise, I can just say proceed. And it's going to go give me here. It's going to go through and tell me. Now, since I've already done this, I don't think I have anything that it needs to be posted. But it's going to go through and it's going to release from all the different modules and post directly into the general ledger. Any questions with this? So this is just one way that we can speed up. It's just 100% done, huh? Okay. And I'm not going to look at them right now. Now, so we got everything over to the GL. We would then post any batches that we would have. And this is just all the normal ways that you're doing things. Is this everyone doing this?
Yes.
Okay, and I think David maybe not, but so we're all the same that far. Now, when you're going in, I really encourage my clients to make sure that everything is tying out. So I'm going to print my trial balance, and I want to verify at this point, and these are tasks that don't necessarily have to be done, on a monthly basis or at the closing, but I think you should at least do it on a monthly basis. What I'm looking here is I want to make sure my accounts receivable is in balance, my inventory is in balance, so I'm looking at accounts receivable, my inventory control, and you may have more than one account in there, and my accounts payable, and the one that's most likely not in balance is my PO clearing account. Now I'll deal with the first three first, accounts receivable, inventory control, and accounts payable, and I'll come back to PO clearing in a minute. So when we have those balances there, we then need to go to accounts payable and run an aged payables. Now, when I'm running this payables, you can run an as of. I would not recommend that because there are certain ways that you can put in transactions that will trick Sage Pro as it tries to back up from the current date to an as of date. It's relatively useful, but if it's an ongoing procedure, I would not recommend using that because there are certain types of transactions that can confuse it. And so I would always just go with the current value in your accounts receivable or accounts payable against the current balance of this report.
No, he's saying he doesn't advise that. Aren't they the one that's told us to do it that way? Yeah.
So someone's told you to use the as of?
Yep.
It can be used, but I have found too many ways that it can be incorrect.
It was as of and also by the transaction date.
Mm-hmm. That might work out better, but I've seen people, when you void and then reuse the same invoice number, and people have done that, it can make it crazy. Mm-hmm. So it doesn't know how to deal with those. So
okay.
You can use it, and if it's working, that's fine, but I have found too many places where it doesn't, so I don't recommend it. I use it and if I need to use it, but since I'm doing this all the time on a monthly basis, for this purpose I don't, and it eliminates looking to see if someone did some type of strange void or did something to confuse the system. So if it's working for you, continue using it. But if you ever find that I'm off by one company's off by one transaction, and most likely there was a void in there or something was put in, just run it without the as of aging and then see if that works. So if you ever run it and you get, the another thing you do, run it with the current date without the as of aging, run it with as of aging on the same date. See if you get the same result.
Okay, thanks.
And so that's another way I would do that if you're using the as of aging. I know some of my clients do, but generally when I'm trying to tie out to the GL, I would post everything and then run the reports without using the as of aging. So we talked about now the accounts payable side, and that should be pretty obvious. Seldom do I see accounts payable get out of balance because people generally are not making journal entries into accounts payable. Mm-hmm. If you are out of balance, you will just make a ledger journal entry. First, make sure everything's been released, everything's been posted, because if you are, you probably had one extra transaction done in a module and you didn't release it, or someone had a transaction made after you released, or you released something in one more item and didn't post it. But before you do any journal entries to inventory control, accounts receivable, or accounts payable, double check that you've released everything, double check that everything's been posted. Otherwise, you'll be making your tying out more difficult because the numbers will be moving on you. So that's on the accounts payable side. Accounts receivable, you run the exact same thing. We would just print the transaction report here, let's see, open receivables aging here. And again, same thing. If you do have different account numbers for your receivables or your payables, you may need to use this account number. I have had some clients use multiple either payables accounts or receivables accounts. If you do that, then you can either add the two numbers together on the GL or separately tie them out by putting in the account number right here. Anyone use deposits?
No.
No, I've never used it.
Okay. Then you don't have to worry about including them. Deposits would be is a relatively new feature that was added where someone will pay for something at the time of taking the order. They're doing it ahead of time, and it goes into a separate account. So it will go into a separate account on the GL, and you would want to tie that out also by running this with deposits and then netting your deposit account against your receivables account and see if you have the right balances. But if you're not using it, don't worry about it. So again, we're just going to go to the final page and double check that our balances are tying. So again, since most people don't make transactions to the accounts receivable account in the GL, everything's through AR, those generally don't get out of balance. Now, inventory control is a different animal. There are so many things going through inventory control that you need to do a couple things. We need to run the on-hand report. And I normally like to use the non-zero option on this report. If you have a lot of inventory items and you have a lot of things that perhaps go to zero at any given point in time, if you run the all option, you will have an issue of just a lot of volume. So by running the non-zero option, it'll eliminate everything that's just a zero. But you also want to see if there's any shortages. So you want to see if there's any shortages in the system. And the number we are looking for here is the total inventory value. So we take that total and that one, and we're going to compare it to, now in General Ledger, you will most likely have many inventory values. Not too many companies I know just have one. They will either separate it by raw materials and finished goods, or many different ways they can do that. And in this company, I'm using just the lesson company. Here we have finished goods, we got materials, we got scrap, all kinds of different things. It should tie out to the balance you have on your inventory control. The other thing you need to look at is the clearing accounts. The IC, especially the one that's the most particular, is the IC clearing. Because if you're making any entries, doing cost adjustments or receipts and issues of inventory, most likely it will default to the IC clearing account, which is just fine. But at the end of the month, the IC clearing account, just about all clearing accounts should be zero. So the IC clearing account should have a zero balance at the end of the month. And if there is a balance in there, just like if you have a balance in your suspense account, you need to go research what that is and make an entry to clear that out. And you'll have to, and that, you know, generally they are either some type of expense or some type of asset that you're clearing those accounts to. But if you do have balances in your IC clearing account, and that's the one that is most likely to happen. Anyone who is doing a lot of inventory transactions you can get entries into those accounts. So does that make sense?
Mhm.
Anyone have trouble keeping their inventory in check with the general ledger? Well, you don't have to answer. I see that frequently. That's one of the more common things that I see with my clients is that you get entries into the IC clearing, and you can get them into some small numbers. Especially if you're using some of the manufacturing production entry, you might get some rounding errors. You might get pennies. You might get a ton of penny entries into those accounts just because of the rounding isn't tying out correctly when you're doing any type of manufacturing. Now, the part that I saved for last here is the PO clearing accounts. Let's go back and take a look. I'm going to preview this again. Is anyone familiar with the PO clearing account?
Yes.
I'm not familiar with it, but it makes sense when you said that all that anything clearing will go to inventory, because I have seen that in the past, and I always kind of wondered how it got there. So that makes sense.
Okay. Now, the PO clearing account is the only clearing account that should have a balance. If we go through, and we're going to put on our accounting hats for a second, when you enter a purchase order, there are no entries that are being made into the accounting system. Just because you have something on order, you do not have a liability, you do not have an asset. You just have a purchase order. Now, the accounting gets a little screwy between the time you start to receive the purchase order and you get invoiced. Frequently, the most common scenario is that you create a purchase order, you will receive the material long before you receive the invoice from your vendor. So what happens is the correct way to deal with this is that you go into receive a purchase order. You will then, when you have normally you're ordering inventory. We'll just use that for the example. You receive the purchase order. You now debit inventory because you physically have that inventory on hand. And to keep your system in balance, you need to record that as an asset. But you have not received the invoice from your vendor, so you do not have a payable at this point. You do have a liability because you are liable for the asset you received, but you've not received the invoice from your vendor, so you haven't created a payable. That amount is what is in PO clearing. So PO clearing should be the amount of inventory or any purchases that you have received but have not been invoiced for. So you should have a liability there, a credit balance, for the amount of your unbilled PO receipts. And if I say inventory control, clearing accounts often have balances and you have trouble keeping inventory control balances correct. The PO clearing account is the one that is most often incorrect. Because first of all, people don't really understand it, and they're not paying attention to it. So to verify what the balance should be, we first need to go to purchase orders. We need to run the unbilled receipts report. And I always take off the beginning date range. I don't know why you put that in. It's a danger of having some old POs that you haven't received yet not show up on your report. So you need to run this report. I would remove that beginning entry date, generate this report, and now we have to look and see if all these purchase orders are still open. You need to verify that they are still, you haven't been invoiced on these. And then you go, if you verify that they're all correct, then we look at the bottom number. Let's see, one more page. And obviously this number was not the value we had in our inventory control, so this one was way messed up, which is not uncommon because people just don't pay attention to it, and you should. So what you need to do, first thing you need to do is to get your unbilled PO receipts report to be correct. And the way to take something out, interestingly, you don't do it in purchase orders. You do it in accounts payable. And under accounts payable, you close an unbilled PO receipt. So if you've had a specific purchase order that's shown up in your unbilled PO receipts report, but you know you've received it and paid for it, you need to go to accounts payable and close the unbilled PO receipts. So that's the first step that you do. Once you get your unbilled PO receipts report correct, then you'll need to make journal entries to get your PO clearing correct. And PO clearing is the one that's most likely incorrect because a payables clerk is getting all these invoices in. And when you get an invoice from a vendor, there's two ways to enter it in payables. If it wasn't via PO, you would enter payables. But if it was via PO, you need to enter it under invoice PO receipts. And invoice PO receipts is the way that it will create your payable, but it closes the PO, it marks it as being invoiced, and it also will offset the PO clearing. So let's see if I have a, I didn't check if I didn't know if I have time for this. See if I have a PO open for this person. And I have a bunch of POs. Let's take this one right here. So if I take this, if I take this one, it will show us the amount of the PO that hasn't been received, that hasn't been invoiced yet, and it will create that invoice. And what it will do it will hit PO clearing. You see how it already made the entry? It has created the, it's creating the entry to the payable. It's also putting in PO clearing for the amount of that invoice of the purchase order that you've received and already have entered in the system. Now, if the invoice amount is different than what you received the inventory for or the purchase order for, you will have amounts remaining to distribute, and you'll need to distribute it. It might be freight in or some type of handling charge. Then you'll just assign those to whatever is the appropriate GL account. But if this was skipped and they did not receive or enter the payable via invoice PO receipts, you will double enter that account. So if it was inventory, you will have debited inventory when you received the inventory. You would also have debited inventory when you received the invoice. So that will double enter against either the asset or the expense account, and it'll keep your PO clearing incorrect. So that is the one account that is the most tricky to keep in balance. And that's the one account that's the most tricky to keep in balance, and you need to, first of all, make sure you release everything to the general ledger post everything, run the trial balance, and then in accounts payable, run the unbilled PO receipts. And if just about every client I run into, if I pick up a new client, I don't think I've ever seen one have their PO clearing account correct. So I did want to highlight that in the month-end closing procedures. Again, you can run that at any particular time. You don't have to run a lot of these reports, but it's frequently to do it at the month-end just so it gets done. Also, it's easier the sooner you find these errors to fix them. If you haven't looked at this account for 6 months or a year or multiple years, it gets very challenging to get those accounts to have the correct balances. The only other thing I would recommend that you do at your closing, and a lot of companies will do it a little bit later, is your bank reconciliation. The other account that we need to make sure that is correct. We need to make sure we have receivables correct, payables correct, inventory control, PO clearing, and cash. If we have those accounts correct, you're very likely to have most of your system correct. If those are correct, you could misclassify a couple things. You might classify something as asset should have been expense or whatever. But generally, if you have those 5 accounts correct, your system will be very, very reliable, and you'll have very good numbers to work with. So I'm just going to spend just a couple minutes here reviewing how you would do how you balance your checkbook for those. Is everyone using the system to balance their checkbooks?
Yes.
Okay. But what you do, I'm just going to go through this. The bank reconciliation. And I'll go back to this one more time. If your bank statements comes at a later time period than your month end, and you can't close it at that time, the bank rec can be done at any time. But what you're going to do here is when you go through here, and we're going to maintain the bank rec, we're going to reconcile the account. If you say we're on vacation and now your bank rec was for, your bank statement was for January 31st and it's now February 16th, what I would do is I would put a cutoff of my check range here of maybe 2-5. I would give myself, 3 days to a week, because sometimes people are entering things and they will enter it it'll get posted to a later date, and you don't want to think something's missing just because it was entered with a date after your cutoff date. So I would not use 1/31/12 as my date when I'm reconciling, just in case something got put in with a 2/1 date, and now you think it's missing or you're out of balance. So you can leave this blank if you're relatively close to the period of your statement. If you did miss a time and you are doing it later on, I'd give yourself a few days to a week and put that in as a cutoff date. So we go through here, we check the boxes, and depending on what you have in the system, this will transfer the information to the bank rec files. And so you only need to do this when you have entered transactions. If you started the bank rec, broke for lunch, and then came back, you would not have to check these again. Once they've been transferred over, they're there. You don't have to keep doing it. So then here, you just enter your ending balance from your statement, and you just check off anything that is cleared. If anything's not cleared, you will just leave it blank. And it keeps telling you what your difference is. Now, most likely, for many of you, you have some type of charges. You'll get it down to a difference of maybe, some of you may have $25 fees or whatever that are done, or whatever your bank fee is. You can just get it down to that amount, your difference might be get down to $25. You can just go in here, enter a manual charge, and you can then it'll post into the system that way. So it'll update your system. So if I'm going to add here, I had a charge here, some type of bank fee for, let's say a bank fee, $25. Now, if this is the first time it's put into the system, I would then check send to the general ledger, and I'd select the account that would go to, some type of expense account. Bank charges. And now if I wanted to update my cash balance, which you probably do because that's why you're putting it in here, you would check that also, and we would then put in here, and now we have this another expense put in the system. And so that's one easy way to get your bank fees into the system right while you're reconciling the checking account. And you'd probably clear that also. I'm going to just cancel this for now. Any questions on reconciling your bank account?
I have one about the PO clearing.
Okay.
When you do the PO clearing through AP, what is the journal entry that the system is making? I think it's hitting inventory value.
Well, let's see. We're right here. We're going to close the unbilled PO receipts.
Yeah.
Okay, let's grab one. And let's grab a small one. Let's just a nice number, 890. Yeah, let's grab this one, 281.90. So now we're saying these are the two lines that we're going to handle. Selected AP journal. So that is, you see where it hit? It hit inventory.
So it's affecting my inventory value.
Well, what most, and yes, it is, but most likely, if you had not invoiced it or entered it in payables through unbilled invoice PO receipts, when you got the invoice from your vendor, you probably hit inventory. This one is doing it to the account that it hit when it created the PO clearing. When you entered the receipt of the inventory, you credited PO clearing, debited your inventory finished goods. So it's undoing the entry it made when it received the inventory.
Okay.
So yes, it most likely, if you didn't receive it into inventory at the time that you received the PO, it'll go to that account. But yeah, I would double check this, and if you do it all in one session, and then you can run this transaction report just by the session number. In fact, I could just do it by 307. Let's re-enter here. And now you can just see what you've done right here.
Okay, that makes sense. Thank you.
So just a way of doing this so that you understand. And most likely, yes, it was inventory because most people enter purchase orders for inventory items. And most likely it was inventory that got double counted. That is the most common scenario. Not always the one, but it is the most common one that I've run into. Okay, after you get all your accounts correct in your month-end closing, then I recommend, and some people do this on the front end, to do all your re-indexing. So you do the reindex, so just go to transactions, system recovery, reindex the application files. Reindex the system files, and you should be good to go for the next month.
You said to do that after you close out, correct, Mike? The
Either
reindex?
before or after.
Either before, it doesn't matter.
No, it's a procedure that should be done at least on a monthly basis. People with large amount of transactions do it on a weekly.
Okay.
And anyone who's using the SQL version of this, you do not have to do the reindexing. That's not a feature. So if you have the Microsoft SQL backend for the databases, you do not need to do the reindexing. This is only if you're using the Visual Fox Pro backend.
Okay.
So it saves you some time.
Do you recommend doing the closing of active sessions?
Clearing flags, yeah, you can do that. That's probably a good thing also to do. You might want to clear all flags. A lot of my clients will do that as the start of the closing procedure. So as soon as this finishes, I'll just go through that. Transactions, clear flags, clear all flags. Most likely, if you have many different companies, some test companies, some historical companies that aren't needed, you may want to just do that only for the current company that's holding your, that you're doing the transactions for. Any other questions on the month-end closing?
What is your
Anything
suggestions on recalculating file balances?
Yeah.
At the same time as reindexing.
Some people do that. I'm not necessarily in favor of that. If you have add-in modules, you can have certain things that have a slight discrepancy that can create a whole lot of volume in there, depending on where you stand. If you're doing it now and it's working for you, continue to do it.
Okay.
If not, I wouldn't recommend doing it because I don't like to do that. When it's going to fix it for you, and if you do that, do you always run it without posting, without updating? When recalculate the application balances?
Yeah, no.
I would recommend always running it without updating.
Right.
First.
Right.
Because the software, it's a program, it makes an assumption as to what data is correct, and will fix it based on its assumptions.
Okay.
So you need to know where it's going to be fixing it, because it could make it worse.
Mm-hmm.
I like to do things that I can tell my clients, go ahead and do it, because I've never seen it make a situation worse before I get called. Reindexing and clearing flags, all of that has never made a problem worse, and I've been working with this for over 20 years. So I feel totally comfortable to do that. Recalculating the application balances and letting it fix the problem, generally it works, but if it doesn't, it's going to make it worse.
Okay.
So that's why I don't like to have that being an automatic procedure.
Okay.
Just my experience. I'm not saying it's right or wrong. It's just my experience has been that way, and I don't like. If it's wrong, I'd rather know about it first before someone tried to do an automatic fix. Which, if it works, is fine. If it doesn't, then it's going to be real tricky to try and figure out why it's not working.
Okay.
So just here, we're talking here. You can clear flags, clear all flags, and this is a good thing to do. And most of my time, I would say do this before you start the closing.
Thank
you, Mike.
Thanks a lot.
Thanks so
You're
much,
welcome.
Mike. It was very informative. Thank you.
Very good. You take care. Bye.